Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Fisker Automotive, ticker symbol FSR. And so I wanted to do a follow-up on this one, which I have been doing weekly on Saturdays, following the weekly close on January 20th at a price of 78.92 cents. Currently, showing that it's up in the after hours about 6% at around 83, 84 cents. So we'll have to see how it opens on Monday next week. But overall, the stock has continued to be beaten down. If we look over at the weekly chart, it looks like price began the week at opening at $1.03, above $1, that being a significant level, and then closing the week again at 78.92 cents, being down over 23% on the week. So that just sucks. But I do think that there are some good things to be thinking about, perhaps that we are at or near the bottom. I do think that we are. And I do think that we will see a turnaround in the near future. So I do think it's good to keep that in mind. And so looking at the chart, there are a couple things that I did update from last week's video. One being the downtrending level of support. As you might notice, current price is above that. And so it's possible it's a little hand wavy. It's quite possible we move below it again. But I do think that this could serve as support, and I do think it's an important level to keep in mind. I do have $1 marked here in purple. That's just going to be a psychological important level to be breaking above. And if you do notice, it does look like there is a volume shelf between current price and $1. So if price is able to get above $1, that could serve as support, and I suspect it will, as it would consolidate at that level before making an attempt at $1.41, where this red line is, going back to this close on December 6th. There being a lot of consolidation above there, that's going to be resistance now. It's going to be tough to break above. And then again, I do have these orange and yellow lines marked at $1.80 and $2, just effectively being psychological levels that I do think will be tough to break above, especially because 180 had acted as resistance before. So if price can get above that and hold above, maybe using this as a volume shelf here, right around $1.88, $1.89, before making an attempt at $2. One thing you might also notice, Ed is blocking it, so I might move him for a second, is the RSI has been making higher lows, which I've gone over in previous videos. That is bullish divergence. However, price continues to go down. I did not redraw this line just because, it is clear that the RSI is still higher than it was previously. Looks like it was 1780 on November 21st, and it is currently at 2190. So still in oversold territory, but price continues to go down. And I do think that it might continue to go down. And so in just a second, I will take a step back so we can look at where the pivot points are for this downtrending line. But one thing I did want to point out, basically it's a strategy that I use whenever I'm down on a stock, when I own more than 100 shares of it. And so with Fisker, during this downtrend that I have been covering, I have been accumulating shares personally, and when it did dip below $1, I started to add more heavily. So now I have a position with an average price that is lower than $1. And so I think that can be useful for selling covered calls. If you have more than 100 shares or just 100 shares, you can sell a covered call, which I do on a weekly basis to make a little bit of money. That little bit can add up over time while I'm holding the bag, and it can also force me to take profit if the option contract does close in the money. So I'll go over that in just 1 second. And so I just want to point out that with price at 78.92 cents, or really like 84 cents in the after hours, let's say just hypothetically, you or I have a position of 100 shares at 90 cents. So that's just going to be kind of the example for looking into selling a covered call. So if we go over to the options tab, I'm just going to zoom in on this so you can see it a little bit clearer. But so for next week, closing the week, January 26th, we can see the options for that week. And with strikes right in the middle here, with, let's see, $1 strike and a $1.50 strike price. And so basically, if you have 100 shares at an average price of 90 cents, you could sell a covered call with a strike of $1, and you'd get a this is a 2-cent premium, but it's 100 shares, so you multiply that by 100, you would get a $2 premium for that. You sell a covered call, you get $2 minus the fee. For me, that's a 7-cent fee, so I would make $1.93. Not really that exciting, a pretty small amount of money, but then if it closes next week on January 26th at a price of $1 above, so closing in the money, I would then have to sell my 100 shares at a price of $1. So that would suck, but then I would be making a profit of $10. So that's not really that bad. Plus, the fee or the premium of $2 that I'd make. So I'd make in total $11.93 after that fee from that premium. Could also sell a covered call at a strike of $1.50. Currently, the bid price for that is 0, but you could set a limit for 1 cent, and that would be $1 or 93 cents after the fee. And so that could be a nice way to just kind of basically hedge on your position, that if price does go up, you can make some money on that and also ease your way out of your position. So for me personally, I have more than 100 shares. I now have a little over 200 shares. And so what I'm going to do starting Monday before open, I'm going to place an order to sell a covered call for 2 cents. So I'd make $2 on that. And then I'm also going to place an order to sell a covered call with a strike of $1.50. And so if that gets filled, I will place the order at 1 cent. So I would make $1 on that. And then that would force me out of my position. And then I'd be forced to kind of take some profit on that. If there was a dip following it, I could buy back shares, or if not, just take those profits and walk. So that's kind of a strategy that I use. But I do want to, before I close the video, just point out where this downtrending line comes from. And so I had previously drawn it from, I believe, these 2 pivot points. But now I've adjusted it to going back to, let's see, the low on January 28th of 2022. And then let's see, also, I believe the close of October 14th, 2022. And I should note that there is one open right here and one close below that line, below that downtrend. So that might, suggest that it is not significant or not notable. But, if I were to adjust it, so no closes are below it, no opens are below it, then basically that would suggest that price is going to 0 or negative. So I don't think that's true. I do think that price could be dipping a little bit more, let's see, at 78.92 cents on the close Friday. Maybe it could go to 70 cents, or maybe just have fun with that, 69 cents. And so I could see that happening in the near term, but I could also see price turning around, making an attempt at $1, which actually happens to be the max pain for next week, closing the week of January 26th. So, I do think that there is some potential upside in the coming week or weeks to follow. So I would not lose all hope. And I do think that selling covered calls is a nice way to make a little bit of money while holding the bag. And so, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.